What's up, everybody? Happy Tuesday. Hope everyone's having a good day. A lot to cover in the markets today, including the fallout from the weekend carnage. Have we gotten a recovery? Have we gotten the regular Tuesday pump today? Also, a minor flash crash that has since been recovered in a coin that I covered recently on the show. Before we begin, don't forget to hit the like and subscribe button, and also you can follow me on Twitter here at Ben Crypto Show. Let's dive in. Markets, so kind of flat on the day, or flat at least in the last 12, 16 hours. Here's the one week chart, obviously a deadly fall over the weekend there. It doesn't look pretty, but on the daily chart, it's sort of flattened out the last 2/3 of the day, like 16 hours or so. So that's good. As I covered in the last channel, we have had a phenomenon of about 6 or 7 consecutive Tuesday pumps. It's a phenomenon in both stock markets and crypto markets, especially the crypto markets. Didn't totally happen today, but at least the prices didn't fall. They remained flat. So you can look at this either way you want. Bullish, bearish. Hopefully it just means, prices will at least remain flat for the rest of the week. Maybe it'll generate some positive momentum. We shall see. And obviously, in relation to the fall of the weekend, of course, now in the last couple of days on Twitter, you got all these Instagrammers, no one specifically on this page, but everyone on Twitter, all the influencers, not Instagrammers, influencers, everyone's trying to take credit. They call the fall, pulling up one tweet that they made 2 months ago, semi-accurately predicting the fall, and then hiding or deleting the other 19 tweets. Like, come on, people. I follow everyone's tweet. Nobody's really been accurately predicting it. Like, just stop. Enough of that. I give credit where credit is due. There's only one person who, I don't even know if I'm following the person, I just saw them in my feed repeatedly. There's only one person over the last couple weeks who has been repeatedly calling for another crash. There might be other people, but the only person is this one person named El Crypto de Capo, or something like that. El Capo de Crypto. I don't know. His posts are kind of aggressive. I don't follow him for that reason, but he's the only person I have seen who consistently, almost every day for the last few weeks, was calling for another market free fall at some point. I don't know if he accurately predicted it this weekend, but he was consistently calling it, so I'll give credit where credit's due. Other than that, everyone else kind of posting their "I was right 2 months ago" tweets. Come on, I'm following your pages, and no, your sentiment was largely positive. The way mine was the last couple weeks, I was predicting this crash 2 months ago, but then, like most people, I changed my tune in the last couple weeks, got more bullish, and then the crash happened. So, I'll give credit where credit's due. El Capo de Crypto, or whatever his name is. I put up a little survey on my Twitter here. What caused the crypto crash? A, influencer-induced panic in the markets. B, bear market balling. C, Terra attacker coming out of retirement for another kill job. Or D, a combination of the CPI numbers coming out on Friday with consensus conference fatigue. 18 votes so far, not bad. Influencer-induced panic and bear market ballers are tied for the lead with the CPI numbers and consensus fatigue. Third, the Terra attacker unretiring. So yeah, I'm not going to cover this in the show, but it's getting around Twitter a little bit that the Terra attacker, a rumored Terra attacker, one of the possible suspects, has come out of retirement recently and is scouting out new prospects. May have had a little bit of a role in the market meltdown over the weekend, specifically on the Celsius side. Maybe the attacker was even a little upset at the Jump Crypto report that came out that indicated it was a non-crypto entity that no one's familiar with. Maybe they like the attention on them. They need to come out and flex their muscles with another kill, being mostly on the Celsius side. Nothing proven, just kind of humorous at this point. But don't sleep on the Terra attacker still being out. Definitely feel that he's still out there, whether he's retired or not. I don't know, but be on guard because, he could be active again. Anyways, yeah, so what my vote would be, it would be a combination of A and D. I think it started with the CPI data coming out on Friday, and then just general conference fatigue, consensus fatigue, people seeing the same people at the conferences, word of mouth travels. People were excited 2 months ago for the market when they were at their conferences. Now they've been to too many conferences. They're sick of 2 months of prices not going up because of the conferences. They talk to the friends there, and then somebody who's only slightly negative at the start of the conference is going to be super negative, and then people with huge followings tweet how everyone at the conference is bearish and price is going to crash, and then so that's where the influencer news panic. I think that was the catalyst that drove it from 27, 28 down to 21. But I think initially, the initial trigger was the CPI data with a little conference fatigue Friday, Saturday is what drove from 30 to 27.5. Then, of course, the Celsius element, too, but that became more of a after the CPI data problem. I think it was when BTC went down from 30 to 27.5. That's what really sort of cascaded Celsius to an illiquid state. So I don't know. We shall see. But yeah, I definitely think it was the CPI data with conference fatigue, and then what really accelerated was the influencer-induced panic, mostly on Twitter. Bitcoin greed and fear at 8 today. No surprise here. It had gotten, so the lowest it's ever been is 6. It was once 2019. It's hit 8 now twice before. March 2020, the pandemic month, it hit 8 then. And then about 2 weeks ago, it hit 8 again. So whereas it had been creeping up from 8 in the last 2 weeks, it was at, I think, 17 yesterday. Now it's back down to 8 today. No surprise here. So second lowest level ever. Here's the chart. It is worth noting the Bitcoin greed and fear was not around during the Mt. Gox incident in 2014. Then it would have been down to 1, 2, or 3 then, like really low. Created in February 2018, the greed and fear, so of the last 4 years, approximately 4.5 years, is now tied for the second lowest. But, not really a prediction of where price is going to go. It's just a prediction of current market sentiment. So as I've been saying, the fall of the last weekend, it really reminds me almost to a T of prices from 2018, prices like the last 6 to 9 months of crypto versus last 6 to 9 months of 2018. I was around then. It just feels and looks, the charts look identical. So now everyone's wondering, so how long is it going to last down in the 20s? Well, I don't really know. You see a lot of people on Twitter like, oh, we're going to be here for years. That's just not accurate. Anything's possible. Of course, if we have a black swan event and then we've been at these low prices for 3 months and there's some Mount Yosemite erupts or something like that, then yeah, of course it's going to go lower for longer. But assuming there's no major black swan event, natural disaster, or something like that, then 3 to 6 months is what I feel. So it sounds kind of long. It's really not that bad. So here's the 2018. So this is the fall that is the equivalent of where we're at now. So we're like right here. So took 6 months from where the prices were initially to get back to that point. So that sounds kind of bad. So it's going to be another 6 months, 5.5, 6 months until prices reach the 30K mark. That's what this chart indicates. That sounds kind of long, but it's really not that bad. Prices don't go down that much, a little bit here and there. So it could just go slightly below 20, maybe touch 17, 18, and then go back up. For the most part, it doesn't really go much lower. And then prices start going up consistently at the 3-month mark. So this chart would indicate 3 months of prices around here. Then they start going up very gradually. Then at the 4.5 month mark right here, prices start increasing at a more rapid pace. So 4.5 months from now, the prices will really start increasing. And then 6 month mark, that's when the curve really goes up and then blow past where we were before. So 3 to 6 months. That's what I think. I firmly think this. I'm not going to advertise this too much because it sounds negative. Really, it's not that much. 3 more months, this price will start to grow up gradually. 6 months, they'll really be mooning. It's not bad. It's not years. Could be worse. Now, this was the story today. So I covered this coin chain, XCN, last week. So I still am very bullish. There was a little one-off incident last night. Very strong fundamentals. This coin, they're hiring 45 people. They were one of the top 3 lead sponsors at Consensus this past week. The price has had positive price action in the 2 months they've been on exchanges. I think they're perfectly right to be listed on the big exchanges, Coinbase, FTX, Binance. They're on every other exchange now, but not the big 3, so that could create some positive momentum. And the team has connections with various employees of all 3 of those exchanges. So those are the reasons I am and have been bullish. But there was an incident last night. So this happened right around 11 p.m. California time. So here's what the 2-month, 3-month chart is here. So pretty good price action, considering BTC has been down during the 3-month chart. It's gone steadily up. And then I covered this in the video. This one-off increase here, which scared off a few other people. Like Coin Bureau thought it was a little suspicious. I isolated it to being just a single institutional investor, somehow whale, who maybe put in $5 to $10 million. That caused the price increase. And the fact it didn't really decrease much afterwards, it is bullish, I think. Normally a one-off infusion capital almost always goes back down to the original level. People always then accuse the coin of rugging, blah, blah, blah. It's not the case. It's very low thin liquidity in the market, so a one-off infusion of a couple $1 million, even in a large cap coin like this one, is going to cause it to go up significantly, and the fact that it held it was and is pretty bullish. But then this is the last few days, so this is the last day here, so it went down from 14 cents to less than 1 cent. This was a flash crash of a 95% drop, and now it has recovered about 70% of that. So it recovered most of it. So what the hell happened here? I mean, at first when I saw that, at first I wasn't really sure. I mean, I knew it wasn't something to do with the team. It seemed rock solid totally. I'm like, is it something shady with another entity or something? I don't think so. So their CEO, Deepak, they attacked this right this morning. They had a big Medium article, 9 a.m. They were up all night last night dealing with this. That's good. So Deepak, the CEO of Chain, XCN, says a single large margin call appears to have exacerbated the flash crash. As much as 500 million chain tokens, it's the equivalent of 42 million USD, through leveraged trading was liquidated within a short period of time. And then the article says that tokens price does not always correlate on a proportional basis with changes in supply and demand. Contrary to popular belief, one large single trade can quickly and disproportionately have a disproportionate impact on the token's price, especially when there's thin liquidity right now, post-weekend, thin liquidity in general, especially when prices are already going down and there's downward momentum. So it looks to me like just whoever this institutional investor whale was, it looks like he just changed his mind and sold. He kind of panic sold, nothing based on fundamentals. I think he panicked because, you know, the market's down the last couple of days, alts are going down. I think it might have also, a lot of people have unrealistic expectations when a team sponsors a big event like Consensus. They think like the next day, Monday, there should be huge partnership announcements. Like, oh, they met Nike or a huge team and come out with announcements. And no, it's the market crashed after Consensus. They're not going to put out a huge positive announcement on Monday, yesterday, about a partnership they formed at the conference, when that news is just going to be buried in the market being negative, and it's not going to have any impact on price. So this is good, savvy work by the team to delay their partnership announcements, or, you know, whatever kind of business they discuss there. So I think the institutional investor isn't quite that savvy in the markets. I think he just panicked, low prices, no immediate announcements, and he sold and his sell. So with the math Deepak did, so it was 42 million of leverage longs were liquidated, which if that caused a 95% price, then the single sale was right around 5 million, which is what I initially predicted. So even though this coin is thin liquidity, this coin has a market cap of 3 billion, it's number 200 coin market cap, but an instant purchase of 5 million caused it to spike significantly, and then an instant sell of 5 million yesterday caused it to fall dramatically. And of course the reason is there were tons of leverage longs in the market. I'm going to put out some tweets on this later to discuss a little more yesterday, but yeah, no one really picked up on the fact that a lot of leverage long positions were initiated in the last couple of weeks. Leverage long just means that somebody who has is buying, they're very bullish, they're long, and they're so bullish, extra bullish, that they are using leverage to make that position. So theoretically that should be bullish. It means the longs have more conviction and the market sentiment's positive. But as we know in the markets, the average person is just wrong more than they're right. So it's not really that bullish, that news. And what it does mean is if there's a lot of leverage longs, the moment the market, if it does go down a slight bit, then they're all going to be liquidated almost immediately. And that is what happened here, to the tune of $42 million. So this sort of flash crash that it's recovered from was basically just in line with the longs being liquidated in the regular BTC and Ethereum markets over the weekend. Exact same principle here. So yeah, CoinBase, he had initially stayed away from Chain because he just wasn't sure what that pump was. I guess he was kind of in the right to notice that and be wondering what it was. But I mean, you know, I get where he's coming from. If anything, it could be a good buying opportunity, because now we know that this fall was just a one-off thing. It wasn't anything shady. It was just this whale selling in the panic sell. So the fundamentals are still strong. I mean, this sure as hell isn't a company, you know, lead sponsor Consensus hiring 45 people. It's about as strong a fundamentals you can get. Not even close to an invisible company that's rug pull. Yeah, they're hiring 45 people. They're going to rug pull. I don't think so. No, so it just could be a great buy on the dip opportunity due to this one-off incident here. But yeah, a lot of people in the comments here on CoinMarketCap did correctly. I mean, the one or two people saying it's a rug pull, but then a lot of people, most people were actually pretty savvy. They admit, no, this definitely is not. We're waiting for updates on Twitter. It seems like some one-off incident. They were correct there. And a couple people actually profited from it. I'm mad myself I didn't profit from this. Like this guy here, so it was at this low for about 3 hours. 3 hours it was at this low, and then it rose 70% afterwards. So I noticed it was happening at the time. I thought about it. I was honestly too tired. It was 11 p.m., a long day. I didn't quite have the balls to put a large position based on that, but would have been in the money, and a lot of people capitalized on it. So yeah, this guy here bought the bottom and sold. It's a 10x. I made $50,000 in 10 minutes. Thank you. That is accurate. I did see this guy tweeting in real time yesterday when it was at the low. He was saying to buy. He was correct. This guy here, he made $7,500 buying the dip. This guy put in 1,000. He put in 1,000 at 6 cents. Made a 10x. So yeah, it's usually these one-off sort of dips. They only last here for like 10 minutes max, but this was 3 full hours. So just pissed at myself for not getting in on that. Moving on. So yeah, could be a good buy in the dip opportunity. Shane, the fundamentals are stronger than any other coin out there. So if anything, it could be a positive. That story. Elon Musk set to address Twitter employees for first time on Thursday. This is pretty bullish in terms of Twitter and Elon taking over Twitter. It seems like behind the scenes, a lot of the issues with the bots, scam accounts have been addressed or are being addressed quietly behind the scenes. It would appear from this that Elon is happy with the progress here, and it would be like Twitter employees meeting their new boss for the first time, sort of meeting on Thursday. That's the feel of this, of the tone of this article here and all the other ones. So yeah, sounds bullish there. Then Colt Dow, so they, as I said, they're going to make their TV appearance over the weekend. So it was not an interview with Mr. Imodulus, but it was pretty cool. It was UFC. This fighter right here, his name is Brendan Allen. He's from the U.S. here. He came out wearing a Colt Dow mask, gave Colt Dow a shout-out during his pre-fight interview. It kind of makes sense that, UFC vibes, Colt Dow vibes, sort of exact same sort of feel, crowd, people, just a total natural partnership here. Pretty effective, too. I mean, it's not like a Floyd Mayweather where, he's kind of he was on the main undercard for the night. Pretty big name for people in the UFC, but he's, it's not going to be getting like Floyd Paul. It's not going to be getting like Floyd Mayweather marketing budget numbers. Is good. They're keeping the marketing budget, using it in, not overextending it. They're being smart about it, picking the right people who fit the brand. I think it's an ideal fit right there. It's good news. That's it. Don't forget to follow me on Twitter again, Ben Crypto Show, and then obviously hit the subscribe button on YouTube. Be back with a new episode tomorrow, and Ben Crypto signing out.